Good afternoon, everybody. Going to go over Forex Trades for today, Thursday, September 29th. Didn't trade yesterday because Janet Yellen was giving her semi-annual testimony. She really didn't say a whole lot. One of the biggest things that we saw that she said that the Fed is not allowed to buy individual equities. And then she followed it up saying that maybe in the future, down the line, were her words, that the Fed may buy individual equities, individual stocks. Leaves the question, can they buy ETFs? Because ETFs, it's really not a stock, an exchange traded fund. It trades like a stock, but it's an actual fund. So curious to see what happens there. Obviously, they were asking her because most other central banks are already doing it. We know Swiss National Bank, Bank of Japan, the ECB. So it would only lead to believe that the Fed does it. If they have to reinstate another round of QE, I would imagine they will definitely have that bullet in their gun to buy some stocks. What other economic news came out between this morning and yesterday? Durable goods beat as core durable good orders contracted for the 20th straight month. Since the government won't say we're in a recession, by the way, that's the longest non-recessionary streak in the history of the United States. So I have to tell you, the government is completely wrong. Atlanta Fed GDP Now model and Goldman Sachs both lowered their GDP estimates. What else came out? IMF says it will be cutting U.S. growth forecast for 2016. They didn't say to what, but they just said they're going to be lowering it. Everything is great according to the administration and according to the Fed. But here you got the IMF now cutting our growth forecast here in the United States. Julian Robertson, one of the most famous hedge fund managers in the world, he was quoted yesterday saying Janet Yellen has created a serious bubble and pain is coming. Well, we know they've created a serious, not just Janet Yellen and the Fed, but all the central bankers are creating an enormous bubble. The question is, when it pops, how severe does it get? Can they take appropriate measures so it doesn't get that severe or that painful, as he says? So we'll see what happens from that. This morning, pending home sales missed, came in terrible, minus. It was supposed to come in with no growth at all. It came in with a contraction of 2.4%. The National Association of Realtors warns current housing recovery could stall as pending home sales slump to 7-month lows. I got news for the National Association of Realtors. Home sales have already slowed. Final GDP for the second quarter of this year came in at just 1.4%. That's the lowest or the slowest pace of growth since the financial crisis. Again, but the Fed and the administration says everything is great. According to Jim Milstein, interview on Bloomberg, he says U.S. pension funds are underfunded by $2 to $3 trillion. We've been warning on that, as you know, if you've listened to any videos. We've been saying pension funds, we got a major problem. They're so underfunded. They were underfunded before the financial crisis, and now with the financial crisis, after the financial crisis with zero bound rates, they cannot. They're not bringing in, between the money coming in and the return, because they're relatively conservative investors that manage pension funds. The returns are not there, so they have too much money going out. So they're underfunded by $2 to $3 trillion. That's one of the highest underfunded estimates I've seen. One other thing, Bank of England governor, I forget her name, but she warned that QE could be here for perpetuity. Basically, could become the new normal for central banks and the Fed to just do QE. We've joked in the past that the Fed and central bankers are trying to monetize the stock market and the bond market. Well, I got news for you. If they do QE in perpetuity, that's exactly what they'll be doing, because they're never selling. They're only buyers, and their capital is endless. So eventually they'll become the largest shareholders in every stock out there. They'll become the largest holder of bonds. They're already becoming the largest holder of bonds. So we will see what happens. Anyway, let's get to our trades. We had 2 trades, which we pulled out just 4.1 pips, but we only traded 20% of normal size because it's the end of the month. And it's been a slow month, so we weren't going to risk too much. The first trade was Aussie CAD. We were short last night from 1.00458. We had put an order to buy at 1.00200, picking up 25.8 pips. We actually got filled at 1.00199, picking up 25.9 pips, or size adjusted 5.2. And you can see what it did there for several hours. It went back and forth right around that number until it eventually popped up a little bit. So good trade there. Pound dollar was a loser here. We had put this order in last night to short 1.29695. Got filled this morning. It just wasn't breaking down. There was no reason to risk too much on it. It tried to break down twice, couldn't bust. We covered it 5.5 pips, so we lost. We covered at 1.29750, losing 5.5 pips, or size adjusted 1.1. So in the end, finished up 4.1. Not the greatest of things, but not the worst either. So that's it. We're going to wrap it up. If you're still trading now, good luck. Not sure if we're going to trade tomorrow. It's just been such a slow month. Last day of the month, maybe just wrap it up. But that's it. If any signals come out, they will be coming your way. And if we do trade tonight or tomorrow, we'll do a video tomorrow as well. Have a great rest of your day. If you don't hear from me, it'll be next week. So then have a great weekend.